Hey there, let's do a video about payroll and let's talk about the number of pay periods in a year and how that affects your payroll. This is really going to be a video that's specifically targeted to understanding payroll withholding when it relates to how frequently your payroll period is. This is a really important thing when it comes to your business is, are you paying your employees weekly? Are you paying them bi-weekly? Are you paying them semi-monthly, meaning like usually the 15th and the last day of the month? Are you paying them every month? There's all types of different ways to set up this payroll application in Excel. But when you have multiple pay periods within the same business or multiple pay cycles, it gets really complicated. So I've set up two different files and I want to explain kind of the difference between them so you can see and understand how this works. So if you are paying every week, a lot of businesses will pay every week. If you're doing that, you want to know, well, how many days after the end of the pay period do you issue the paycheck? That's what it's asking you for here. And also, when is the paycheck? First paycheck of the year. When was that? That's going to help you figure out when your last pay period ended and when your paycheck was issued. So for this weekly payer, this is saying that the last pay period that's related to the start of the new year here in 2023 ended in 2022 because it's 3 days after the pay period ends that you actually issue the paycheck, which is related to what year you have to file for payroll. So the paychecks come out on January 2nd in this instance in 2023. That's a 2023 payroll cycle, even though all the days worked were in 2022, but the paycheck comes out in 2023. So it matters for the 2023 file. So as you set up your weekly pay here, you got to figure out, like I said, how many days after the end of the pay period does the check get issued? Put that information in here. Also, you have 52 pay periods for the year under this scenario. So you put that here. And you get an entire cycle of every single paycheck that comes out for the year for each employee. That's what shows up in the pay period record sheet. And it cycles. So you get the first 52 pay periods for the first employee, goes all the way down to here. And then you get the next 52 pay periods for the next employee. So that generally, when you look at this and you enter in information in the payroll area here of the pay period record sheet, you just look at one pay period at a time. Oftentimes, you're like, oh, I just care about this very first pay period on January 6th. And you get all employees, and you could enter in information for all employees for all these pay periods. So that's kind of how this pay period record sheet works, and it stacks together all the different payroll cycles for all the employees. Okay. So what we have here is we have one employee. We look at the employee info tab. You put in your information for your employee. You put the name, whether or not they're married. You also need to fill out this part for the W-4. You need to answer the questions that they filled out on their W-4, what their filing status is. If they have any other income deductions, did they check the box for two jobs in box 2C, yes or no? And did they have any dependence amount, which you would put in thousands here if you were to do that, okay? Because it says 2,000 per employee dependent. So you fill out that information in here and you get a makeup of the employee. And then you end up getting your pay stubs and everything. So one employee getting $1,000 a week with the deductions we set up here of married would have a federal withholding in the state of Florida where there's no state tax, federal withholding of $84, $64 Social Security, $14.50 Medicare. Now that's for a weekly payer. All right. Well, what if you're not paying by week, but you're actually paying semi-monthly? I have another file set up, separate file showing what the semi-monthly structure is. Okay. And the reason why I want to compare the two and look at the two files is I want to show you why it's complicated to combine multiple payroll cycles in the same file. It can be done, but it's really difficult, and I'll explain why. I would recommend using two different files and adding the numbers together on your reporting because it's really difficult to throw them in the same file. But this is your semi-monthly payer. Same situation, except this is only paying twice a month, right? Same person, they're married, they're in Florida. What does their pay stub look like for this person? Their pay stub, the first one comes on the 15th of January, because a semi-monthly payer generally pays the middle of the month on the 15th and the last day of the month. So notice the difference in withholding here. Notice it's only $42 in federal tax. The weekly version was more. The weekly version was here. Weekly version was $84, right? Even though the Social Security is still $62 and the Medicare is still $14.50, those don't change, right? But the federal withholding changes. And the reason why the federal withholding is much less on the semi-monthly version is because this $1,000 per paycheck that the employee is receiving, well, they're only getting 24 paychecks a year in the semi-monthly version, 2 each month. In the weekly version, they're getting much more. They're getting 52 paychecks a year. So they're making $52,000 a year in this weekly version. So they're going to have to pay more tax. In the semi-monthly version, they're only making $24,000 a year. So they pay less tax. So you see there's a different amount of federal that's going to be withheld depending on which payroll cycle you're on. So if you're doing multiple payroll cycles in the same business, I would recommend having a different payroll file for each one of them. And then at the end of the quarter, you'll add the information from these two 941s together. You'll have a 941 for your weekly version, and you'll have a 941 for your semi-monthly version, which is going to be here. So you would add these two amounts together on your 941 when you're filing it, because you got two different payroll cycles you're running with the same business. That is the easiest way to do it, because otherwise you've got different dates that you have to make deposits every single time you issue a pay stub, and your payroll cycle is all irregular. It needs to be a regular payroll cycle. So I would recommend putting your business on the same payroll cycle for everyone. But if you choose not to do that, then you're going to need multiple files, which is still really easy to make these different files. We can just change these variables so that you can create a file that is at any pay frequency with any amount of employees, and the paychecks are on any day. But because it changes the entire nature of the file and all of the different pay periods, I would not recommend trying to mix and match payroll cycles within the same file, because it's just really, really complicated and it's going to be irregular. So I would not recommend doing that. But anyway, that's the quick overview about payroll cycles and how they're incorporated in this file, and why there's a different amount of federal withholding that will appear depending on what payroll cycle you're using for their employee, because it's related to how many pay periods in the year. That's how much tax they got to pay. All right. So good luck, everyone. Payroll should be easy. We are making it so.